And so this is recording. Oh, you did a gold weekend, gold a couple of weeks ago. Great. G'day, Abhay. So welcome to the Australian bank shares. We're going to look at the primary ones, of course, with a little bit of Macquarie Bank. And you should be seeing my screen now. And what I want to do is I'll also field your questions because sometimes we forget Clydesdale Bank as one of the Australian banks, well, listed banks, Australian listed banks, and it can be fun to pay attention to because its cycles can be just glorious as well. And for some reason my computer's beeping. Anyway, let's begin. So we need to follow our disclaimer and warning, and this information has been provided by Adest Trading Proprietary Limited, a corporate authorised representative AR 289519 of Alpha Securities, and Alpha Securities AFSL is 330757 and level 2, 22 Pitt Street, Sydney, New South Wales 2000 is an important address for you. For some reason that's important. And welcome to your second one, Stuart. So this is general advice, does not constitute financial product advice, and does not take into account your investment objectives, financial situations or particular needs. Prior to investing from Adest Trading, you should look and consider your broker's financial services guide and consider the product disclosure statement or PDS issued by and available from alphasecurities.com.au or your broker or platform provider prior to investing, so you know the risks and what the costs are and all that sort of stuff if you are trading. I don't get involved with any brokerage or brokers really. I pay them a fee for my license and you're welcome to trade with them, not a problem with that. It doesn't affect my thinking whether you trade or not. I know a number of people who do give advice out there actually take commissions from brokers for doing that, and it's probably just me, but I wouldn't ever feel comfortable doing that, getting a turnover on what people are trading, and that just wouldn't sit with me well. Anyway, the some people may be able to remain unbiased. Maybe I feel I couldn't trust myself. Whether that's true or not, I'd just rather not be involved with that. So while Adest has made every effort to assure the accuracy of information at the date of publication, we can give no warranty or representation, and we can give accept no responsibility for any errors or misstatements, negligent or otherwise, because this is just my opinion. To the extent it permitted by law, we can't be held liable. The brokers, the employers, the Alpha Securities, trading derivatives can be risky, and you might trade CFDs on these things. You might trade options. You might trade futures. Just be aware that the more leverage you have, the more chance you are of either getting really hurt or making a lot of money, in which case that will create a larger ego for you and cause problems further down the track. So trading derivatives can be risky because of the emotional consequences as well as the financial consequences. They may buy or sell the financial products or as agent. Alpha Securities may buy its products as agent, and Alpha Securities may get some brokerage. So let's go on with that, and sorry for how long it is. Basically, we're going to have a look at the bank stocks could be set for the bigger and better things. Some bank stocks which have had their day, and the bank stocks that may have one more go up, and the bank stocks that might have one more go down. We might talk a little bit about the Profit Hunter Group, and you've heard about who I am. Nobody else here. I've been involved quite a bit with different financial institutions, Qantas for foreign exchange, Aussat for interest rate products, Qantas for oil, Macquarie Bank for trading everything, and this is what I love to do when I'm not doing the Profit Hunter Group. I sneak out to Phillip Island and go surfing at this particular place, which has a very nice tube on it. As I get older, it's getting harder to get in the tube. As it gets colder, it's harder to stay in the water, but I'm managing to do that a fair bit these days, which is good. Anyway, so We talk about Elliott Wave, and I've managed about $4.5 billion funds, written a thing in the trading guide, and we'll get on to this. So we're going to see what I do is manage what I think will happen in the market and tell people what will happen in the market and try and give them perspective of how they can get in, where they can get out, how far the stocks should go, where their stops should be. And I do that using charts. I use that during chart cycles and different the psychology of the markets, mass psychology, and the news that's coming out. If you're thinking about my next events, next one's, you look at the next events page. Sometimes I do a bit of education as well, running around the country. So we're going to look at outlooks and strategies on banks, ASX shares, the badly typed XFJ. Probably may get to the bargain stocks. We'll look at what's expensive and what's a bad bank and answers to your questions if we have time. Basically, banks are a product of the economy, and the government policy can influence it, like stupid things with the State Bank of South Australia tax. Now, we used to have taxes like that in the 80s. I used to have to manage those things. They were called federal debits tax, where you took money out of the bank account. You had to pay the government, the federal government. And I can't remember whether it was Bob Hawke or John Howard. It was underneath one of those, and probably Bob Hawke that introduced it. And then there was another one called a FID, Financial Institutions Duty, which meant when you put money in, they charged you 0.03%. And basically, I spent a lot of time in corporate treasury trying to move bank accounts around Australia and manage bank accounts and manage money so that we didn't put money in and just lose money every time you turned it over. It was an incredibly regressive tax. I don't know if anyone remembered it, but very much similar thing to what we've seen proposed by a friend in Malcolm Turnbull, who should really have been elected as Labor Party president, or Labor Party, head of the Labor Party. And the South Australian government had a dig at that too, but I believe it's failed. So other things is local government policy and local short-term interest rates via the RBA and their cost of funding comes into overseas borrowing costs and longer-term interest rates. It's also impacted on the cost of capital and how much they have to pay for dividends and convertible preference notes and how they manage their capital, Bank of International Settlements, all that sort of rubbish that they carry on with. And basically there's a God-given right for the banks to just steal off you at will, charging you 4.5% interest rate when they're giving depositors less than 1%. If you've got a business account, I think it's something like 0.5% that you might get interest if you're lucky on some of those Commonwealth Bank savings accounts. So here are some of the banks. I didn't drop in the venerable Macquarie Bank because it's kind of a bank and it's kind of not a bank. And Macquarie Bank made me fat when I worked for it because we had a trading room and in the treasury, and basically I could walk in and I could eat anything that I wanted, and so we called it either Donut Bank or Macquarie Bank. So, Adrian say a 90-day term deposit is under 2%. So what we've seen over the last few years is stealing off people with money and giving low interest loans to people who borrow money. So we've seen a destabilization of the financial risk-reward ratio. If you've got cash in the bank, you've seen housing prices go up quickly and very fast. Your cash becomes worth a lot less in houses. We've seen the stock market kind of go up, but kind of not go up in Australia. It's gone up well in the US. It's gone well up well in Germany. All these countries with quite low interest rates We have low interest rates, silly low interest rates, but that's kind of benefited the banks, but it's also kind of hampered the banks in expectations. We've seen overseas investors give the banks lots of business because they have money overseas, and the banks go, oh, we don't care what your lending criteria, what your income is. We just know you're Chinese, so therefore you've got lots of money, so we'll make up fictitious lending things. That sort of stuff is cut out now. So the banks have got to survive a bit more on their interest rate margin and on their wits than they have before. We all know that banks have cycles. What else do banks have? They pay dividends. You might have a look at the moment, some of the banks, I'll just read out some of the dividend yields that we're getting on banks, and I get interested when we can get paid for turning up. At the moment, ANZ's on an 8% dividend yield. At the moment, CBA is on a 7.28% dividend yield with franking credits. Westpac is sitting on 8.93% dividend yield. The Macquarie Group is on, believe it or not, 6.56% dividend yield with some franking credits. It has a bit of a problem, as ANZ does, because they have been doing business overseas more. Bank of Queensland is a bit of an indeterminate yield, but it doesn't pay a bad dividend. It's a bit hard to focus on. National Australia Bank was sitting at just over 10% at one stage. It's now at 9.63% on a fairly frank dividend. So you get some chance at these stocks making you a bit of money just by sitting in them. And lately people have been saying, are you buying for income or you're buying for capital? And the answer is you probably should be doing both, because the dividend yields are sensational, really absolutely sensational, and it beats putting money in the bank. You're better off buying shares in the bank when the things drop down to the right level. So I think that's, I'm just trying to look up Bendigo Bank's dividend yield. Just see if I can find that now. There we go. And it's sitting at 8.69%. So it's hard to argue in a low interest rate environment with buying dips on the banks, and that's something that I have been thinking is a good thing, but at the right time. Now, many of you have done the webinars on the way that I think in terms of Elliott Wave and Fibonacci, and I won't bore you with the tenets. If you want to do that, just ask me for the emails, and ask me for the webinar links to other ones, and I'll go through the explanation. But suffice to say, we're looking for wave 1, 2, 3, 4, 5, and these waves have certain characteristics. Wave 5 tends to equal the length of wave 1, and wave 3 tends to be the longest. Wave 4 tends to retrace 38.2% of wave 3. Wave 2 tends to retrace 61.8% of wave 1, and it does that about 40% of the time. Wave 4 tends to retrace 38.2% or 23.6%, somewhere in that range, about 70% of the time, and then we get a push up into wave 5. We have here the psychological characteristics. Wave 2 is a depressed time. Wave 3 is a party, and wave 4 is confusion. Wave 5 is fairly certain that it will make an attempt at wave 3 top and maybe go a little bit higher. So if everyone's making money and partying, you're probably close to the top of wave 3. If everyone's depressed and really more negative than they were at the bottom of wave 1, you are probably in wave 2, and that's when George Barburis wanted to punch me in the head and kill me on October 4th, 2011. If you go to my website, you can see that recording of me jumping out of my skin about how good it was. Now this is important. Let's look at the financials index given that structure. Now this should not be appearing in the way that it is. Let me just fix this up. It doesn't seem to be doing the business that I expected. There we go. Okay, so here we can see that when I say Bodkins, this decline here shows overlap between two waves. You might think that that might look like a 5-wave structure to the downside. It is not, because there is too much overlap in this region. We then see, and this is the financials index, I should be very clear on that. I'm sorry if I wasn't just launched into it. But what we can see here is that there's been this good movement up, a good rally up into April, and certainly end of April was where I targeted in my forecast for the price action to start to fall. So we were all over this bank move, and if you saw me on Your Money, Your Call, you might have noticed that I was bearish up the top there, and that's documented. Most people think I'm a loony, and that's good because people pay me well to come up with the loony stuff. Now what's going on with this next is we see here this move up being wave 1. Notice it's quite sloppy. It's not the best wave 1s in the world, and I'm not exactly happy calling it that way. But if you think about this, this would be wave 2. The next one up could be a little wave 3 in little little Roman numerals 3. This decline here would be wave 4. Why am I doing that? Because of the scale of this decline doesn't really match this decline in wave 4. We do see a terminating pattern into wave 5 on this one. This is a little wave V. It could be the top of wave 3, or could it be just the end of wave 5? We don't know. What we've seen is a decline of 50%, and then notice that I called it Goodkins because there's space between this low and that high, and there's space between this low and that high. As long as it respects above there, it's not bad. Now when we look at, we drop down into the lower level rally, we see a couple of things. The first off is that the rally looks to be corrective because of the way that it's been going up. To get strong, it needs to be above 67.60, and to be strong. And to be weak, it needs to break below 6,400 and should see this 59.86 area. So we have a flag in this pattern and a strong decline in that. When we go further onto the daily pattern, we can see this is a little bit even a wedge-like pattern, and so the rally still looks corrective in nature on the way up. And I haven't asked anybody whether they're bullish the banks or bearish the banks, and maybe I should. Let me do a poll. This is probably just going to be a bit of a pain in the ass to do that. Normally I like to do the statistics. I'll just do this on the fly because I can. Okay. And I'll give you the neutral option. You can have the neutral option. So The poll's open. You can have a look at that now. Now, a number of you are PHG members, so you've seen a few of the things that I'm interested in, and I'd love to see what you are. At the moment, we're saying 63% with 50% voted, 61% neutral, 28% bearish, going a little bit higher here. So at the moment, we have about 26% bullish. I'm going to close the poll off here now, otherwise we'll be here for a little bit too long. But you can see the results here, and the results say basically 25% bullish, 25% bearish, 50% neutral. Now that to me says that this is a fourth wave rally, even though it's just done under about 50%. So, and there might be a bit of a bias because of people influenced by what I say on a day-to-day basis, but what we can see here is this is probably some sort of fourth wave, if not a B wave. And when we look down here, we see the ADX is not trending to the upside on the daily charts. So you might expect it to get just above 6,700 at best, and certainly below 6,400 is not good. So it's basically not a strong index overall, and I hope you can see my charts now. Sorry if you couldn't. Thanks, Adrian, Charles. So this is a corrective style pattern. Okay. It wants to challenge my abilities here, doesn't it? Let me find it. There you go. So we can see here what I was saying here. The rally still looks strong. You should have something up there now. Thanks, Charles. Thanks, everyone. So it might go up to 67.10, that sort of area, and it could still go down to 63.50 or thereabouts. So this is in trouble below 6,300. It's kind of in trouble below 6,400, and we see that we have some non-confirmation of trend on the upside. So at the moment, the rally still looks corrective, and it's not trending up. So my conclusion is the XFJ is still a bit suspicious, and that we should pick individual banks. Now, my thesis has been that one bank in particular may have topped in May for the next few years, and we were projecting for that bank to have a high in May. We may talk about that later. CBA, I've liked it because it's probably the next cab on the rank. And let's go have a look at this. The first bank we'll have a look at is ANZ. And basically, at first blush, the waves are still looking for higher levels. This is a yearly chart. That Y means a year, sitting up in that corner. Hopefully I can. So this is the Y, which means a year. And you'll notice here that since 1991, really, this has been trending up. Yes, it came back down to here in 2007, but we have a 1, 2, 3, 4. Remember that pattern that I showed you? This is not a perfect pattern because it's not the perfect triangular pattern, but this could be wave 4. Maybe we need an A, B. We might have an A, B, C, D, E, and then it scoots higher in theory. So we notice here that this is still a positive nature on the yearly advanced decline index. So I like that as an indication of trend. and we see here the pattern is 1, 2, 3, 4, 5. We notice this higher swing low, higher swing low, higher swing low. So at the moment, it's pretty good if it holds above $28 on a closing price basis, on the yearly basis, and maybe even on the quarterlies. Now, how does that sit with my hope of $26.10 on a flurry down? I'm not holding my breath, but I'm still interested. I would be liking to pick up ANZ on the lower levels. I'll still be happy to do that because I think it will represent pretty reasonable value, and you can have a stop at $24 as an investor, or maybe just a bit below it. If that breaks, then you're looking down into this $16 area. So we have pretty well the scenario mapped out. Now, what we see here when we narrow the focus is something important for ANZ, and it makes me believe in $26 or a push lower. Notice here we have it done a 38.2% retracement into this area, and it's coming off. Notice today this little inside bar had no volume. Notice yesterday this bar had good volume. Well, actually, this bar is here not bad volume, but we're seeing increasing volume to the downside as price falls. So notice here increasing volume, increasing volume. This was increasing volume on the upside, but it's shifted. So at the moment, it's a little bit suspicious, and it's broken this top. So this is still corrective in nature. So ANZ is not really on my hot list. Let's look at the ANZ on the seasonal cycles, and we notice that here the reason I've called this webinar is because the banks generally like to have a bottom around this time of year, and well, some of the banks do, and it's not the greatest bottom, but let's have a look at the XFJ because I didn't cover that then. And it does like to bottom around the mid-July, but the safest buying is end of July and maybe even end of September, third week of September. I'm sorry if I'm being a little bit preachy in the language in the languaging here, but we can see rally up, FXJ not awesome, and we could still see some weakness even though next week may be strong. Okay, so ANZ, this is our clock. It likes to dip into mid-July, but better at buying maybe end of August or September. Now, I received a question here today from Dietrich, and thank you for the question, Dietrich, appreciate it. Of the banks I take an interest in CBA. This was my view of CBA at the end of May, looking for a retracement back down into, it's gone up since early June after 5-wave correction. Yes, and reached to 61.8% of its decline when it topped at 84.50 in June. I had expected it to decline, but to look at a 4th wave regular flat correction which may have finished yesterday. All minor timescales have positive divergence of yesterday. So was today's price action a 4th wave of the decline, or was the beginning of the 5th wave upwards? So let's think about that, and I'll show you what first thing. And I have to declare a conflict of interest. My great-grandfather, Bob Parry, was the Secretary of the Commonwealth Savings Bank in the 20s and 30s. Anyway, so CBA, let's look at the yearly chart. What do we see? We see here similar pattern to ANZ. Swing low, swing low, swing low, swing low, higher, swing low, higher. So we've seen higher swing lows for quite some time. This smells like a 4th wave on a larger time frame. I was looking for down towards $68 as a target area. It got close last year. I'd love to see $62, but I doubt if we'll ever get that. So generally, we've seen a higher yearly high already. Now what we're seeing here on CBA is a fourth wave retracement, that 38.2%. It's not fantastic in terms of a wave count, but nonetheless we could say, okay, if it holds above 81.40, then it's okay. Now Dietrich was specifically asking, is today fourth wave of the decline or was the beginning of the fifth wave upwards? The answer is it could bloody be anything. That's pretty annoying to say, isn't it? So what do I mean by that? Let's look at this. The problem with fourth waves is they're confusing. Now, this is the weekly chart. So let's do a quick retracement count, and I'll do it using the simple tools. And we can see here the retracement really was $83.86 area, and it went through that to 84.37, I think. So number one, weekly charts. This actually likes to top around end of July and head down. Bottoms early, mid-July, has a 1 week rally, and then kind of tops out and heads down. So it's in that annoying part. Looking at the 83.88 area, if this is a proper 61.8% retracement, you would start to project the price down from here. So you would think if it cannot get, Adrian is saying it goes ex-dividend mid-August, and that's been one of the reasons I've been telling Profit Hunter Group members to be buying CBA, because it pays a dividend. So here we go. There's 87.69. Okay, so this is kind of a better target. Let's pick that up. Sometimes these tools can be a blessing and sometimes they can just be shit and annoying. Okay, so the question is this a fourth wave pattern to the downside? And I can't see that on the weekly charts. So we would be projecting down to $78 or $74.28. If it starts really, maybe it tries a little bit higher and then starts off down to look into end of August for buying. Now, as Adrian says, they pay a dividend at that time. I myself bought some CBA shares, lower levels, and I like to get the dividend. You know, you've got to see it down towards really about $76 or $74.28 if you're thinking about buying it. So maybe you're better off, if you're short-term trading, you go for a little bit of strength, but generally you'd be holding off till the end of August to be getting into CBA if you're not already in from around, you know, just around that $80 or lower. So that doesn't answer your question properly. So Dietrich's question was, I had expected decline, looks like done a fourth wave which may have finished yesterday. I kind of don't get that, Dietrich. Not saying you're wrong, I'm just saying a fourth wave decline. So if this is a fourth wave, we get a 38.2, that's tick yes. We need more information, and staying, I guess, above that $81.40 is the go. So you can simply, rather than doing an Elliott wave, trade it on a short-term basis with a stop loss below, say, $81.30 and hope for a retest towards 83.42 or 83.88. These CBA, they should start to recognise this as a bit more of a buy. The 45-day rule, if it was in mid-August for ex-dividend, would have come out around about, started coming in, I guess, around about this period here, around about the 20th of June, for those people who get more than $5,000 worth of dividends a year. So CBA, still worthy, but if you really got to play it better than ever, because quite often when the dividends are coming up, you'll get that hit down over here. I think it was February. Yeah, you'll often get it hitting down before it pays its dividend, and a bit choppy. So caution with the CBA. The dividends you should be looking a little bit further out for the dividends payments, working with the dividend payments. What I will do is show you right now. So let's go on to, we've done the fourth wave, we've done the cycles. Let's look at the bank that I recommended today, well, had recommended in the forecast webinars, and we come up with a trade in that today, and I'll cut to that. And just 1 second, please. Okay, so the bank that we went for is Westpac. Now the orders that I put on showed in the forecast last week, and also in the PHG trades, was to buy 1/2 of a position on a break, buy a full 100% on a break above $31.16. Earlier, before that broke, I ordered a buy at $31.07 on 1/2, and changed the order to be 1/2 on a break above $31.16, which was subsequently filled, and that's called a trader date for those people who've done the forecasts or are bronze members. Stop loss is currently at $30.59. Target is $31.69, which probably doesn't sound that much to you, but it's an achievable, realistic target given the pattern. So Westpac we have entered, and we have entered, and second half we have entered. Okay, so we're fully long, and I'll start to explain the rationale. Now, Westpac, I'll do this on a different one which gets the actual real data in. Westpac's kind of like CBA. Westpac paid its dividend on the 4th of July this year. And Westpac has not achieved its 38.2% target. So of the banks, it's got the potential for a little bit higher. Notice today we had, just ignore that, I don't know why that's come out there, but $31.69 is the target. Today we bought on a break at $31.07 and bought more at $31.16. You'll notice the volume is increasing. Notice the higher volume on the way up. So it's a good little trade, and at the moment we're going to raise the stop loss up to $30.73. could do a little bit further, and we could have also entered the other day on Wednesday when it was a bit lower, but nonetheless we're on the way. Notice ADX is kind of low and there's a bit of separation going on there, so it's not bad. Let's look at the week. We've looked at the weeklies. We can see here that it had its low back in mid-June. It generally likes to bottom around this week and head up, and it's probably got a bit better consistency up into October than the other banks. So there's cycle reasons, there's a bit more movement available in the price action retracement. Even though it's not sensational, it's still worth a little trade. Now, let's have a look on a yearly basis. Is it still worthwhile on a yearly basis for investors to play? And the answer is swing, 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 higher, swing. And notice here we've got low at $28.86, a new yearly low at $27.57. We've seen a new yearly high on a break above that last year's high at $33.46. So if you're going with a longer time frame, it's kind of okay to go with. Drop down onto the monthly charts and we can see, yeah, maybe it's good for about 33.66, but you weren't expecting it to shoot its lights out on the longer time frame, just to have a little bit of a bias. Notice that we've beaten, we've held above the swings from April and June, July in that area. So it's had a retest, so it's kind of okay to give it a bit of a go. And it's once CBA goes off the boil and starts paying dividends, then they start looking at which one's next, and Westpac's kind of fresh. It's had the knocking out when it paid its dividend. ANZ may be coming into that as well. Are there any questions on that? We'll drop up to the National Australia Bank and we'll do the yearly analysis there. Rory, if you've got a question, say yep and type it in the chat box. I don't normally talk about how to talk about in the chat box. I probably should at the start. Now, what do we notice about NAB? Well, first off, this is from 1990, so it's had a good swing up. It's had that punishing swing down, and then it's kind of got a five-wave structure. Okay, David's asking, sorry to bug you mid-webinar, but just wondering where this sit with your predictions of a wider global market setup. Now, my belief, David, is that the Australian market and the US markets are so different now that we can't see, yes, we might be affected a little bit on the margin if the US market tops and comes off. We're seeing signs that it's got a chance at coming off. It's made a new high. Maybe it's got a little bit more to go towards that target area that I keep giving in the gold and silver webinars. But we're more likely, because we've decoupled, and a lot of stock markets have decoupled with each other. They're just letting Donald Trump do his own thing. Those ones that have decoupled, we've been weak, so we might get stronger if the US comes off. That's relatively stronger. So what does that mean? National Australia Bank, we've seen that big swing, and we can see here, as Stuart says, there's a lower swing high at the moment, but within this it still may be some sort of 5-wave structure, and this can be a 4th wave for another push up. But NAB's not the bank it used to be. It divested itself of Clydesdale Bank, which it used to be wonderful for it, then it became horrible for it, and then they sold it at the bottom of the market just as the UK was going to start off again. Now we don't have yearly data on this, but we can drop down onto quarterly data and see that Clydesdale has been doing well, so it might make up for NAB's stupidity if you've still got Clydesdale. So you might not feel as bad if you're still holding that full holding of bank shares. So we're trying to wait for National Australia Bank because I've just insulted it. Doesn't want to come out of the woods. Let's drop into NAB. And NAB likes to bottom, you guessed it, early July, mid-July, and what it does is it likes to rally up into October. It's generally not that awesome until really gets its feet going until early September. We notice it's got some pain. The quarterly charts, could call it for 2372 on the downside. Notice the quarterly, high volume. Notice the rally, decreasing volume as it rallies. Dropping onto the monthly charts, we see here 1, 2, 3, 4, 5. So this could possibly be an ABC pattern down into the $28. So NAB kind of fits into the ANZ scenario, not that awesome. Daily charts. This is not really doing the job wonderfully at the moment. Daily charts falling all over themselves. We've got kind of not even a proper 5-wave structure here. But I'd say it probably gets better if it breaks $30.11. So again, lacking trend to the upside, again, lacking confusion. So I'd rather go with a venerable Westpac trade at the moment until we get some better information on the other little puppy. Okay, I don't think I've got what I need here. So I don't think we'll cover the wave 2 stocks at the moment, but I might. We'll have a look. I might cover them a little bit wrong. Let's play with Macquarie Group. Did anyone remember I said that there was a stock in the banks that I think was going to top in May? Does anyone remember what that stock was called? Proves no one listens to me, doesn't it? No one cares. Charles doesn't remember. Macquarie Group says Ray. Abahe says Macquarie Group, MQG. Yes, it was. David remembers MQG. Okay, so what have we got in terms of a top of MQG? Sorry, I have to jump around. Sometimes some data comes up, some's on the net, some's not. Okay. Now, Doug calls Macquarie Group. Thanks. Data. Here we go. This is the chart of Macquarie Group. Now, you'll remember it's got higher swing highs and a lower swing low. We could forgive it for having a double bottom on a yearly basis. If we pulled up the charts here, you'd probably see that it's kind of higher bottom. And this did in fact swing down and break that low. It can be forgiven. Nicholas Moore's a nice gentleman. So is Alan Moss for all of his shenanigans with Dick Smith. But we also see Macquarie Group had a top 10 years after its 2007 top. That top was in May. This top was in May too. And we notice so far this year we have a doji on the yearlies, and it has not broken through the high that was at $98.64 back in May previously. So this has experienced some sort of fourth wave on a lower time frame. Ronnie's pointing out it's rallying on decreasing volume. We noticed that this was May for a top in the quarter of May, and rallying on decreasing volume. So volume goes down. I don't know if you can see these very clearly. Volume dropping down there, price going up. Not what we want to see. This is probably wave 5 in this instance. Okay, so whatever way we want to debate it, it's got some things that might be negative. It came in on time. It hasn't broken on the quarterly chart, but it did break the old top above $90, and it keeps on chewing into the $86.72 top there. So I'd say close below $85, set sales for $81, and probably down into the $65 area, if not a chance at $55 to $60. You got to remember Macquarie Group, they do wonderful things in bull markets and they have problems in others because what they do is they over leverage and get involved in a lot of good stuff, and they make money in the bull market, but when the bear market comes they have a bit of problem. You might think of Sydney Airports as a case in point. Anyway, so okay, what does Macquarie Group like to do cycle wise? Are you finding this useful, people, or am I just blathering on? Notice Macquarie Group doesn't like to have a bottom like other banks. It likes to sog off into early August. But its big pain comes in March usually, February, March. Why that is, I can't tell you. Used to work for them, but I can't tell you why that would be. Maybe it's they pay executive bonuses, all right? So Macquarie Bank is not, year end is March, is it? Charles? Is year end for Macquarie Group March? Either March or September. Okay, so you know, you've had the excitement, it drops off and you sell in May, go away, then come back to think about August or early September to buy in when they start having the powwow. So what we're seeing here is a descending triangle. We've seen a top based on a 10-year cycle. So I can't get, they're going to have to pull some magic rabbits out of a hat for Macquarie Group when it gets below $86, because otherwise it's in deep poo-poo and we're looking to those lower levels. Okay. Now, it's over to you. What would you like to look at in terms of banking stocks for a Bank of Queensland and the Bendy Bank? The Bendy Bank. Bank of Queensland and BTT, which is a financially. Okay, Tony. Tony. Hope you're good. Okay. Okay, let's do a look at cycles for Mr. Bank of Queensland. Bank of Queensland, similar pattern. Mid-July, next week of July, and then a run up into October. That's nice. Let's do the yearly gig and give us an idea of what the yearly looks like on Bank of Queensland. I should also check out whether there's any lost souls. I hope there's not. Okay, so this is BOQ. Now it's been in existence since 1990. What's the problem with this chart? Well, of course, the problem is it hasn't done very well for the last 7 years, not gotten above the old tops. What else? It broke last year's low and it hasn't really rallied that well. So it's suspicious below $10, but we'll give it a benefit of doubt because it is from Queensland. Vince, I can see your question. I'll need to delete a few things before I answer that. Okay, so let's look at the quarterly chart. Still not good. And I'd focus on $9.36 area and notice that this is a nice up move and this is corrective in nature. So I'd be looking $9.37 on the Bank of Queensland. But when? The answer is I don't know because it doesn't fit with the cycles. Let's do a daily roundup and we can see it's certainly gone higher than the other banks on this retracement. It's kind of outperformed on the retracements against the other banks. So what does that tell us? It tells us it's okay. It probably needs another push towards about $12.26. And I don't mind looking at buying this down to $11.54, stop below 11.40 cents, hoping for that higher area towards 12.26 for whatever reason, structurally. So that's Bank of Queensland. Now, Vince is asking, is Westpac at the moment is my short-term favourite bank? Why is that? Because it's got the capacity for a bit more juice on it on an upside move to the target area. Now, longer term, I still would prefer CBA over most of them, but I'm cautious that CBA needs to be traded at this point unless you're already in from $80 or lower. Why? Because it's going to be harder yards getting into that area. Now, Vince is saying also everyone is talking about a crash in October. No, you've done my forecast, Vince. My forecast is for a 10 to 20% decline starting in early August. If everyone's waiting for a crash in October, it's probably not going to happen, or it will happen earlier. So let's Bendigo bank it. Let's look at Bendy. Now, I don't know about you, but almost every credit card merchant I deal with uses Bendigo Bank. You go to a place and Bendigo Bank. A lot of them use St. George as well, but Bendigo Bank features prominently. What is the problem with this chart? Number one, it's in a triangle. So it's been confusing itself for the past 10 years. Why that is, I don't know. It's not in Queensland. But we can also see it's made a new yearly high. So in terms of the regional banks, Bendigo Bank is a little bit better than Bank of Queensland. It's also been making like the right noises, but I'd worry about it if it broke 942. What else are we talking about here? Picking up on the monthlies. David says he used to work at Bendigo Bank. CEO told me his mantra was to never compete on price, only service, which is kind of silly, but it's kind of not in some ways, David, because when you're in a bank, I guess you got alternatives. You can go to the next place. Bank of Queensland was aggressively offering loans last year, and they said, unbelievable numbers to me that we could borrow, or I could borrow. And then when you said, well, how about it? They went, oh, we've changed our policy. So yeah, price competition does kind of hurt you in some ways. Yeah. So we see strong volume to the downside, but overall the pattern is not brilliant. I'd give it down to $10, maybe a little bit lower, $9.72, somewhere between $10.06 and $9.72. If you can pick it up down there, it's good. What do we do with the cycles? So I'm liking Bendigo as a principle better than Bank of Queensland, but I don't understand why, because you think Bank of Queensland would have more capacity to make lots of money from improvement in materials. You see, Bank of Queensland generally bottoms in June, and we can see it bottom 9th of June, and it's stronger-ish. It's head-butted something. It gets better if it gets above 1160. It becomes a buy above 1160 for a run into mid-August, and then a dip. So Bendigo is a bit better. than BOC. Okay, next cab off the rank, we have the request for BTT. Thanks, Vince. Now this is BT Investment Management. Number one, we see declining price. Let's go and add a volume in. So we can see what's going on with the volume. Notice volume declining on declining price. So it's kind of okay in some perspectives. But it generally isn't best from now on, which is about here, we're about over here, until it's probably safer to think about in early September for rally up into mid-November. Let's do I don't think we can do a yearly on BTT, but we can see it's kind of okay. It's kind of in a fourth, come out of or is in a fourth wave. When we drop down onto probably the monthly charts, we might see that fourth wave behavior and that it's done a fifth wave. So we see 1, 2, 3, 4, 1, 2, 3, 4, 5. That's a bad wave count, but it's struggling. It's not bad, but below 920 would be bad. Okay, it's not awful. Let's look on the dailies. Okay. So BTT probably in a fifth wave with a bit more to go. We've seen a retracement on the 38.2. So here's the way you play this. If it breaks above $11.50, then buy it looking for $12.26. If it breaks down below $11, then sell it. So BTT, I would prefer to be buying it just because of the way the longer term uptrend is. But you don't have to be in a grand hurry for buying it. Now, we have a couple of questions in the box, which the box has disappeared. Next one is the bigger Suncorp. Yearly, boom. 1990 again. Terribly crushed. In fact, this was going to go broke in 2007 until Kevin Rudd came along. 2008, he was seriously going to go broke. It's had trouble getting above that 1563 area, and we can see volume is still not fabulous. We're about halfway through the year, still not awesome. On the monthly charts, we can see Suncorp striving for the retracement to 1620. So I think it's okay on a monthly chart, just looking for retracement to 1620. Stop is at 1397. Let's see if we can find any rhyme or reason in its ability on cycles. The answer is it's usually got its best buying dip in March, and it tends to rally August, September. So at the moment, Suncorp is higher ranking than Bendigo Bank and higher ranking than Bank of Queensland. And you've got higher targets. At the moment, if you want a stop loss below $14.30 would make sense on a longer term basis. So these are the stocks, the bank stocks that are, there's none that are finishing the uptrend. In other words, there's nothing terribly good. There's none that are finishing the downtrend. Are there any in continuation waves? There's none in continuation waves. Down. And there's the XFJ is continuation in the uptrend wave. So at the moment, index is kind of funky. If you want to look at some of the indexes on an accumulation basis, the financials has been quite a good index. And XFJ, we've talked about before, it's probably coming in, it's probably in the fourth of wave 3 of wave 5. What do I mean by that? I'll explain. It's confused. The fourth gives you confusion. Wave 3 gives you strength. Wave 5 gives you a termination. And at the moment on the weekly chart, if it came back down into the 59.86, you'd start thinking about it, good thoughts. So at the moment, as I've mentioned before, you might expect the 6,700 area. You might dream of 68.25. But overall, financials, we kind of got a mixed picture across the board. We're not likely to get lower interest rates. The banks have done well during lower interest rates, not including Bendigo Bank, Suncorp and Bank of Queensland, so they're more playing catch up. Any more questions? For those of you who are not Profit Hunter Group members and would like to be, send me an email during the day and we'll show you some things. XXJ is the bank index less property. Yes, it is indeed. Similar results are found on the XFJ and XSJ. Now this is the XXJ and the banks tend to dominate. See that same pattern, 69, 70, 66, 70 target area. Let's see what we get in terms of rhythm. So we've still got the same pattern, we've probably still got the same cycle. We'll do XJ. Sorry about that. I don't think it works. It does. Okay. So here's the weekly, and on the weekly chart we can see it's rallied just like the FXJ into the right area. It likes to low mid-July, a bit like the XFJ, and it gets more interesting after third week of September and tends to rally up into October. So playing that game, we're going to do a yearly. We can see the XXJ has done well, but it really needs to clear through 79.10. So it's still a little bit confused. We see 1, 2, 3, 4, 5. We're possibly in a fifth wave, so a push higher is to be hoped for. And the first break would be above 78.78, stop below 69.82. Again, that doesn't change my analysis for the XFJ. You really need, and in financials in general, you really got to take them on a case-by-case basis. Look at the rotation of the dividends and the movements and the safety in the dividends. Be careful on the XXJ if it's busting about this area here at 71.30. And we'll just look at a little trend line and see if we can draw that in. It's kind of already tried to break it, but let's make it here. And that would be below 71.45 on a stop on the XXJ. We all done, all good. Then my conclusions are Westpac for the short-term trade, CBA looking for dips. If you can get a $68 or a $62, that's magic. If you can get ANZ down at $26.10, that's also magic. Westpac is bringing up the rear in terms of the rally. NAB, a little bit dubious. Westpac, if it broke and got $27, start to soak up some there. That would be 1, 2, 3, 4, 5 to the downside. So we might think about shorting Westpac on a little bit of a rally up. And remember, we looked at the timing. That would be end of July and then another dip into August, September. Okay, so are we good? Any more questions? We've got another question coming up. So it looks like the coast is clear for buy and hold type investors like older people who hold the banks in their SMS for income, i.e. no big sell-offs for a while in the XFJ. Little bit not quite there, David. If you get a good sell-off, 27 in Westpac, 26.10 in ANZ, I think it was $23 in NAB, $68, that's where the long-term buy and hold should really, really load up. But you should also be looking to buy specifically on medium-term dips in the stocks that you can get good dividends and the next dividends coming up. So it's kind of like a monkey bar strategy. You're going to look for the next rung. You're going to make sure that you get to the next run rather than looking for the end of the monkey bars, because you're going to fall off if you're going to do that. So do the monkey bar strategy. Does that make sense? You can be, you know, we haven't quite proven any of the washout, you know, proven that there's been a completion of this washout. On the XPJ, we can see the property index, which has got some relationships to the banks. Now, it just blitzed it below 1375 and just kept on rolling. It's still trending down, and you know, it probably is okay if it gets above 1302, looking for 1332, but we can see some ugly targets down to 1100 area on this one as well. And so see here, that 1171 area is the area, and if the property index is down there, maybe the banks start to become better value down in that zone, and at least you can defend the position off 1171 on the property index. Thanks everybody. Have an awesome and fantabulous evening. Thank you very much. Thanks everyone. Have a good one.